Good day, everyone. You are welcome to this week's Business and Investment Tips Program, a production of RCCG Christ Church Radio with Dr. Ayodeji Ebo, an investment professional. This week, the focus is on simple metrics to consider when selecting stocks. Individuals who invest in stocks often encounter a challenging dilemma. They must decide whether to thoroughly research and analyze the financial health and prospects of the companies they are considering, or to trust the insight and recommendations provided by professional advisors with expertise in the market. This choice can significantly impact their investment outcomes and requires careful consideration of the risks and benefits associated with each approach. Stock metrics are valuable tools for evaluating, comparing, and monitoring the performance of various stocks. Although these metrics cannot guarantee that every investment will be completely safe and profitable, they can significantly enhance the likelihood of identifying stocks with strong potential for profitability. By utilizing these metrics, investors can make more informed decisions and improve their chances of achieving favorable investment outcomes. As the new year approaches, we anticipate that investors will begin positioning themselves in the stock market in preparation for the forthcoming full year financial results. This strategic shift is likely to be influenced by expected corporate actions that are usually announced in the first quarter of the new year, which will shape the market's direction in the months to come. When it comes to investing, this matrix helps to identify high-quality companies. By focusing on these indicators, investors can enhance their chances of selecting firms that are not only resilient but also positioned to generate substantial returns over time. Understanding this matrix helps in making informed decisions that lead to promising investment outcomes. These metrics are recommended mostly for beginners in stock investing. 1. Revenue or sales growth. Companies that experience consistent annual sales growth have a greater potential for profitability. As a prospective shareholder, it is important to monitor the sales growth trajectory and review historical growth over at least 5 years. A company's sales revenue is calculated by multiplying the total quantity of product or services sold by their average price. Generally, faster growth rates increase the likelihood of a rise in stock prices. Therefore, understanding the products the company offers can provide insight into potential demand and the level of competition it faces. Additionally, it is crucial to consider how government policies impact production costs and profitability. 2. Consistent dividend payments. Dividend is a share of profits after tax that a company pays out to its shareholders. Dividends are like interest in a savings account. You get paid regardless of the stock price. Investing in dividend-paying stocks is a very popular strategy for many traditional investors, especially in Nigeria. To invest, you can select companies that have paid dividend at least 3 out of 5 years. This guarantees you periodic payout apart from potential capital appreciation, which is the increase in the share price above your purchase price. The dividend return or yield is also a critical metric, which is calculated as the dividend paid per share divided by the share price. This helps you to compare and select companies with higher dividend returns. 3. Consistent growth in profit. Profit refers to the positive financial gains a business achieves after deducting all expenses, including interest on borrowed funds. As a shareholder, you can only receive dividends if the company is profitable. It is rare for companies to pay out dividends from their past or accumulated profits. Therefore, it is crucial to stay informed about the companies you have invested in or are considering for investment to ensure they are making a profit. If a company reports a loss, you need to determine whether it is a one-time occurrence. If it is not, it may be wise to sell your shares, as continuing losses can negatively impact the company's share price. 4. Strong leadership. A strong leadership team is essential for a company's success and significantly increases the likelihood of achieving robust growth in both profit and sales. It is wise to invest in companies led by teams with a proven track record and a reputation for innovation. This factor greatly influences investors' decisions and helps minimize investment risk. 5. Release of positive news. Most times, the stock price of a company goes up when a company publishes positive news, which includes strong quarterly results, new products, announcements of dividends or bonuses, and so on. In addition, stock appreciates when the government releases a policy that will support and make business more profitable. This also means that negative news and policies will push a stock price downwards. Hence, it's important to read up consistently when investing in stocks. Investing in stocks is a journey that demands considerable time and patience. If you prefer a more hands-on approach, consider investing in equity mutual funds. In this scenario, a skilled fund manager will take on the responsibility of managing your investment, allowing you to benefit from market opportunities without having to actively engage in the day-to-day decisions. For those with a significant stock portfolio, it may be worthwhile to enlist the services of a Securities and Exchange Commission (SEC) registered asset management company. These professionals can closely monitor your investment and offer tailored strategies, though this service typically comes with associated fees. Additionally, if you are interested in diversifying your investment to include foreign securities, exchange-traded funds (ETFs) like the Vanguard 500 present an excellent option. These funds provide exposure to a broad range of international markets while being traded on stock exchanges, making them a convenient choice for investors seeking global diversification. Thank you for listening. Please join us same time next week for another exciting and interesting session. For comments and feedback, kindly forward to ebo.ayodeji@gmail.com or send SMS to 070-8246-3747. Stay blessed.